Folks, welcome to another Thursday Night Stock Charts Live. This is Bob Desmond, and it is 6 p.m. October the 8th, another Thursday. So, this just caught my eye. I heard it on the radio earlier. I thought it was somebody goofing. But apparently, Nancy Pelosi is going to have the unveiling of a 25th Amendment panel. I do believe that is an impeachment panel. I have to look at this further. This is just absolutely insane. Franklin, WG Shocker, hello. Hello, everyone. I'm waiting for some people to filter in, so I'm killing some time here. Creating a commission to review the president's health and fitness for office. Oh, this broad is out of her mind. Incredible. All right. I'm just scrolling through some of the headlines here. So what we're going to do tonight is we're going to do as we normally do. Every Thursday, what we like to do is review the weekly charts and take some requests from the audience. And the reason why I'm pausing here, my encoder, or actually YouTube, is showing like there's nobody on, but I'm seeing comments. Like, it's really crazy. Emilio, how you doing, buddy? It's showing nobody on, but I have 4 likes. I don't understand. But anyway, okay. Such is the business of being live. So let's get to it. Who caught the debate last night? Anybody? Any thoughts, feedback? Who won? Who lost? Draw? All right. Let's do the weekly charts. A really strange week, I got to be honest with you. Very, very strange. The TLT, we've been talking about, hey, pre-drag. He's done with debates. Apparently so is the president. Pence did better, agreed. Emilio agreed. Okay, so let's talk about bonds. Bonds are breaking down on a weekly basis. We have broken down below support. This is a 20-year bond ETF. 1 trading day left to go. A lot can happen, but I doubt that this is going to recapture support by tomorrow. So if bonds are rolling over, that means yields are pressing higher, which we predicted. 10-year yield, weekly chart. We're off the highs of the week, but we've hit highs last seen back in June on the 10-year yield. And we have a clear W formation and a breakout. I think that we may pull back and fill this gap. Looks like we're going to close out the week possibly and probably with a doji formation. That's a sign of indecision. If that happens, yields will drop next week. I don't think it's going to happen this week. The tips. This is reaffirming that opinion that we will probably see a drop in yields next week because the tips, this is Treasury inflation protected securities. Normally they do well in a declining interest rate environment when the Federal Reserve is behind the curve on inflation, which they most certainly are. And you're seeing the tips on the week, they undercut several weeks worth of support only to reverse this week and close at the highs of the week today. Very positive stuff. So this is inflation bullish, therefore gold bullish, gold mining bullish. The dollar. This is a monthly chart. Let's go to it. It's way too early in the month to talk about a monthly chart. Weekly chart. We broke down this week. We have a new weekly low. We could still rally back here. If we do, expect weakness in industrial metals, in precious metals, in energy, oil, which is broken out this week, at least on a daily basis. The VIX, a real rejection this week. The VIX being the fear indicator through the first couple of days of this week, at least the first day, and the past couple of weeks, we've had up VIX and up S&P 500. So finally, with the S&P 500 moving up higher, the VIX is finally starting to drop, which is a good thing. Let's take a look at a daily chart. How do we close out the day? We bounced off of support, held the 50-day moving average. We're in a trading range. It's the best that can be said at current. Now, I did open up a short position here on the 6th. Why? Bullish key reversal on the VIX and a reversal bar across the board on the major indexes. And I don't like the mega cap trip Q names right now because they've gotten way too ahead of themselves. So I decided that's where we'll put our hedge on as the transports. We spoke about this last week when we had a new month, a new quarter, and we went over the quarterly chart of the transports. Let's go through it right now so I don't tease. We broke out last quarter. This quarter retested the breakout point, and now we have, do we have a new quarterly high already? 11,786. No new quarterly high yet. Oh, no, we do. New quarterly high. Dow Jones. Oh, you know what? Let's go back to the transports. So the story here is that the transports have been sending us a signal that they want to go higher. There's something going on out there in the economy. We're beginning to recover. We're beginning to open up. Not my state, not California, but most of the rest of the country where there's sanity. By the way, if you don't know me, I'm in New York. So the transports continue to break out here. I think that a lot of traders are front-running stimulus because the reason why we sold off the other day was that President Trump walked away from the negotiation tables. What happened to stocks, which were up? They rolled over. So that was the signal by the market that one of the primary reasons why we're moving up higher is a bailout. I'm not saying it's the right thing. As a fiscal conservative and a libertarian, you know, there's a place for government, war. And you want to argue that we're at war right now? Sure, I'll buy into that. We need to salvage out some of our industries because, God forbid, we lose the airline industry. I mean, how do we fight another war? We have to save it. We have to save it. But this has got to end. And the Dow Jones Industrial Average is anticipating a new round of stimulus. The question I have, though, is that they're dragging out this stimulus package. They don't seem to be in a rush. But the stock market is moving up higher. Now, let's war game this out. If the stock market is moving up higher in front of the event, what happens on the news? Does it sell off? Think about it. Food for thought. Watch if this market gets too extended. That news could send us lower. So we're rallying on anticipation. Be careful of the announcement. The S&P 500 weekly chart, good stuff. Breakout, up nearly 3% on the week. What's missing? Volume. I can go through most of these. Dow Jones, volume, light. Transports, light. And declining up volume. Where you're not seeing that is with the small caps. The small caps are not only breaking out, they're breaking out on fairly decent volume. We're set to outpace last week's volume, unlike the large caps. So the small caps are really leading the charge this week. They're up nearly 6% on the week. The banks, very well they're doing this week. Up nearly 3.75%. We are running into the 200-period moving average on a weekly basis. Do we close above it? We don't know. One trading day left to go. The 50-period moving average is threatening to take out the 200-day moving average. It's probably going to happen. So we're probably going to get a pullback on the banks. And the proximate cause of that pullback is if I'm right about the bond market. If we pull back next week, because remember, we gapped up this week. Do we pull back this week, the following week, and fill that gap? If that happens, that means yields drop, the banks drop, because that's how they trade. The indicators, though, I'll tell you, the banks are looking good. They're looking the best I've seen them in quite some time. Indicators strong, both the RSI and Stokes above the 50 mark. So the banks are looking good. Let me go to some comments here. Pre-Jag, speaking of yields, Bob, I don't think I've ever heard you take on housing. Is it a bubble? No, I don't think it's a bubble yet. I think that I think what they've done, I think it's a great point you bring up. I think it's a great point. I think what they're doing, pre-drag, is that they're pumping up the new bubble, just as they did during the early to mid-2000s, and then you had the burst in 2007 and 2008. They need a bubble. They need to prime the pump. And what's helping prime that pump is the mass exodus from the Northeast, from California to Texas, to Florida, the Carolinas. They're doing very well. They're doing very, very well. Tennessee is doing very well. So, yeah, I think you're going to have pockets of bubbles. Will it be a nationwide bubble? I don't know. I live in New York. I live in the suburbs of New York City, which is Long Island. Housing prices are going up here, no doubt about it. Is it a bubble? No, I don't think so. But in areas such as Florida, they have certainly taken out the highs of the housing boom. We haven't yet. Not really. We may be on par. We're right at the verge of a breakout. But good question, Pre-Jack. I'll bring up a chart of housing in a minute. And the chart will tell us whether or not we have a bubble. The way we figured out that there was a bubble in housing, two ways back in 2005 it began. That's when I started looking at housing, saying, well, what's going on here? KB Homes, you could look this up on the internet. I think it was 2005. KB Homes they were financing most of their own deals. And they were the Pimp Mac Daddy of housing at that point in time. And they sold off to Angelo Mazzillo, his old outfit. This guy should have been in jail. Tom Enns. Do I see Tom Enns on my feed? Hello, Tom. A long-time friend. So Angelo Mazzillo, I forget his name of his firm. God darn it. I don't want to Google it. I'm trying to keep my mind fresh. It'll come to me. The firm, they were the largest housing lender, and they went bust. KB Homes sold their mortgage portfolio, their mortgage business, to Angelo Mazzillo. And I said, why? The economy's so good. Then the Bankruptcy Reform Act came out. The banks went to Congress seeking a new bankruptcy law, and they got it. And so I'm saying, wow, the markets are booming, housing's booming, and this is where my contrarian antenna pick up. And I jot this stuff down. I keep track of this stuff. And I said, why are the banks so afraid? Then I started looking at housing. Housing earnings started coming in lower, lower, lower. Stock price higher, higher, higher. Divergence. That was a bubble. We knew it wasn't going to end well. So, Countrywide, thank you. Amerimigo, good man. Thank you, sir. That would have tortured me. Tom, BIGC will never take Shopify for lunch. BIGC. Who's BIGC? Big Commerce Holdings. I think I've seen this one before. This was a request a while ago. As memory serves, it was in Fuego at that point in time. Yeah, it was moving up high. I guess it was back here. They're a Shopify competitor, Tom? Christopher, they're taking a huge chunk of the Midwest e-commerce space and growing fast. Oh, okay. This is to BIGC. Gotcha. Okay. Learn a new thing every day. Open-minded we must be. If you're like me, as old as you get, the mind wobbles. Believe me, I'm starting to get there. Tom, where are you? Canada? I know you're not living in Mexico anymore. You up in Canada right now? Welcome aboard. Good to have you. Okay, let's bring up housing since it was brought up. The symbol is HGX. Philadelphia Housing Index. If we want to define a bubble, we want to identify a bubble, we're not going to use daily charts. We're going to go to at a bare minimum, a monthly chart. And what we have here, you know what, let's bring up a quarterly chart for giggles. Now, there's a lot more room to run here. There's a lot more room to run. We broke out last quarter. This quarter, we've retested support, and it's held. And we're up so far on the quarter, over 5.25%. So, you know, this is an early stage breakout. I mean, we've been vacillating in a trading range for quite some time now. Backing, filling. Everybody that bought back here finally is made whole, and now we're beginning to break out. This is not a bubble. Especially with lending criteria the way it is at current. I mean, if you blew your nose and you were able to sign your name to a piece of paper, they gave you a loan back in the 2000s. There's nothing I don't like here. We have a clean breakout, higher lows on Stokes. Now, that doesn't mean on a very short-term basis, we may be overbought and ripe for a pullback. Daily chart. Actually, this is a weekly chart. Beautiful weekly chart. Bullish reversal bar. Daily chart. Again. The daily chart still looks good. No bubble here. We're breaking out of a very sound base. You want to call it an inverted head and shoulders setup? Sure. Left shoulder, head, right shoulder, break line. The neckline has been broken. Misspoke there. housing going up. And you may see yields press up higher in the coming months. It doesn't matter, because what's going to happen is that no matter what, people are fleeing cities and they need mortgages. And even if there was no flight from the cities, with yields as low as they are, people are going to flock to lock in deals. What that's going to do is inflate the bubble. If there is going to be a bubble, it's going to inflate that bubble very, very quickly. And then, poof, it goes away. So the housing, like you can't have me saying bubble now, Gdrx. The housing rally may be shorter lived than one might anticipate once you have a settlement of the people leaving the Northeast and, of course, California. Good question, though. How's that Vancouver housing market, Tom? I heard Toronto really pulled back quite a bit. XLK Technology. This is where I get a little bit iffy. Look at the volume on technology this week. Yes, we're up, but the volume is horrible. Look at this volume. I mean, you can't buy this. I don't care what this looks like. And this doesn't look good. These are filled candlesticks. These are indecision bars. Last time you saw one of these, we pulled back. I'm not saying it's definitely going to happen, but usually when you see these, like back here, it doesn't end well. We need volume to the upside. Semis, they're doing well. Up nearly 6%. How's volume? Meh. Let's go to the trip cues to see how we are doing on the week. Look at this volume. Horrible, horrible volume. And as we're pressing up higher, let's move this up higher here. Take note of the ultimate oscillator. As price is moving up higher, ultimate oscillator is pressing lower. That's not a good sign. So we're short of the cues at current. Still net long the market, but short the cues. Because names like Microsoft, which is the number one component of the cues, it's up only 2% this week. Stokes is down below 50. And when you take a look at the chart of Microsoft, and I've been warning about this for months, you still have RSI on a quarterly basis at 92.35 on Microsoft, a mega cap, worth over $1 trillion. Yearly basis, RSI is even worse. 93.47. You want a bubble? Microsoft. Biotech's beautiful week this week. This is a leveraged ETF. So you're going to see the percent and say, what the heck is going on here? Take this, divide it by 3, because it's a 3 times leveraged ETF. LABU up nearly 25% on the week. Energy. Okay, so we have a tale of two stories. One is the Energy Select Sector ETF, predominantly fossil fuels. Very close to a breakout on a weekly basis. We're long of ExxonMobil. My neck is killing me, pardon me. And we are up, at least the XLE is up, 6.75%. A very good week this week. But we haven't broken out yet. I think we have a higher low. What we need now is a breakout to new higher highs. Now, the real story here is not with energy per se or oil companies. The real story is with solar. This is the TAN Invesco Solar ETF. Weekly chart, RSI 84.07. We're flirting with the third standard deviation Bollinger Band on a weekly basis. RSI 84.007. If I didn't already say that, I think I did. Look at this volume. This is not mom and pop buying 100 shares. These are mutual funds. These are fund managers. And they've been buying for months. But right now, I'm looking to short them as a scalp, not as a bet they're going to collapse. I will probably, if they continue this rally into the election, I will probably buy puts, very near-term put options on this sector because it's very overbought. Even if Biden wins, which is the reason why they're rallying right now on a Biden victory, then I would expect to see a correction in the solar stocks. If Biden wins, then they'll move up higher after a correction. So that's the game plan with solar. Healthcare, good week. This is another leveraged ETF, up 9.5%. No breakout yet. Very volatile. Volume, horrible. Here's oil. I'm kind of out of sequence here. We have finally a weekly breakout. So far, one trading day left to go. We know a lot could happen. And on Saturdays, we review all of these charts again with members, and that's when I discuss the week ahead commentary. We look at the closing price action of the markets. That way we set up our game plan for the new trading week. We discuss watch stocks in great detail as well as our positions. Emerging markets, of which we are long. We're up 10.5% on the EDC, another leveraged ETF. And we have broken out on the week. Gold. Now, gold broke down 3 weeks ago. And Stokes are still weak on a weekly basis. I'm looking to see whether or not we rally tomorrow or do we break down. I did sell a good portion of our gold mining trade. We booked profits. The shares did pull back. They have since rallied back to about par is where we got out. I'm still a bit iffy right now. And I'll talk about that in a moment. But first I want to get done with gold. Daily chart. You know, it was an update today, but really a meh day. We closed off the highs of the day. Still can't close above the 1900 mark. Stokes, lower highs. RSI, lower highs. I can't get excited about it. Now, this is what we sold and booked profits on was the GDXJ. Tomorrow, actually next week I should say, both lines on Stokes will be down below 50. Keep in mind that this time of year, October, November, December, seasonally unfavorable periods of time for the miners in gold. So that's why I'm kind of being very, very careful. And yes, the election's coming up. We will continue to hold a position in the miners. Daily chart. Now, I was concerned about a head and shoulders set up on the Stokes last night. That's been negated. So we may get a follow-through rally to the upside on the GDXJ. But look at this volume. I can't get excited about it. Silver, I really don't like this chart. This is like a dead cat bounce to me. You have both lines on Stokes down below 50. And those who are new to watching, when you get your stochastics trading down below 50, and declining, rallies tend to fade. Rallies tend to fade. So we never forget that. And look at the price action on the week so far. We were higher. What's happened thus far this week? We faded. Yeah, we're still up, but we're well off the highs of the week. So if you got all excited early on in the week and you went chasing silver, you're slapping yourself right now. Be patient. Let everything work out. It'll come to you. They always do. Daily chart. There's nothing to do here. Nothing awe-inspiring. Horrible volume. We're long of silver, AGQ, but I'm not ready to go buying more here. Uranium. We're long of weekly chart. We broke out back here. We're retesting support. We'll hold it. I'm not looking to add more right now. And I think that's pretty much it. Did I cover everything I wanted to? I think so. Let's take some chart requests. I was asked, what's with the beard? It's Sober October. So during Sober October, I usually grow a beard. It's in protest of Sober October. No carbs, no booze. I'm down 7 pounds in the past week and a half. It sucks, to be honest with you. Okay, but my energy levels are great. All right, I have a bunch of members' requests here. MJ, BSRB. Oh, BSBR. JPM. And that's it. Let's go to the chat box. We'll do Emilio, you want BNTX? I'll write it down anyway. Tom, we'll take a look at your BIGC. There's not a lot of data there, but we will certainly take a look at it. NVIDIA and Verizon. Okay, let's do this. This segment, folks, is brought to you by our sponsors over at TrendSpider. TrendSpider is the next generation of automated technical analysis. In all seriousness, folks, if you don't have TrendSpider, you're missing an arrow in your quiver. I call it my spell check for technical analysis, and it saved my butt a bunch of times. And there's a link below, 35% discount code on TrendSpider. Okay, let's do this. MJ, this is a weed ETF. When I first brought it up, it was one of our members goes, you know what, I don't think you know what you were looking at. Because I went over the chart of MJ, I'm like, oh, this is like a DBA, an agriculture ETF. And he starts laughing. And he goes, it's a weed ETF. I said, oh, I didn't know. So I'm well aware now that this is a weed ETF. I think it's going up higher. You get a Biden victory, man, weed all day long. And they might as well. What the heck? Free love, peace, baby. Yes, Manoj was the one that told me that. Yeah, good memory. Yeah. Is it from Manoj? Let me see. No, it's for Chris. But it was Manoj that told me that. That's so funny you mentioned that. Okay. A very nice setup here. We broke out here in August. It's marked as red because it closed lower than where it opened. So, but it was a breakout nonetheless, a breakout in time. We pulled back, failed. This month, gapped up higher. Good stuff. Now, Over here to the right is your volume by price. Very, very important because it shows you where or how much in the past of a battle there has been at this price point. I like MJ on a rally up and through 1337. Before I leave this chart, take note of your Stokes higher lows, RSI higher lows, and we have a breakout on a monthly basis. So MJ breakout monthly basis, this is looking good. And I don't even think it really matters anymore. Democrat, Republican, I think that ultimately, at some point in time, it's all going to be legal. They need the tax money. Weekly chart. $11.65 was a resistance level that we broke out and above. I think that next week, one way to trade this would be to enter MJ. That'll be a very, very good long entry. I'm going to keep this active for a while because I do like the wheat stocks. We're good there. I also want to know, because we may not hit the support level, I also want to know when we break out. Again, we'll keep this active for a couple of weeks. And we're good to go. Daily chart. Yeah, you can see what we did was we rallied right up and into weekly resistance today. I think we're going to get a pullback. We'll probably bounce off of this. I'm going to move this up a bit, if I can. No, it's not letting me. All right. We're close enough for government work. So MJ looking good. I wouldn't buy it right here, right now. You're right into resistance. Too much risk, not enough reward. Wait for a closing breakout or a pullback to support. Why is this showing that we're below? Oh, yeah. This doesn't make sense. What price point is this? 1162. We're above on a weekly basis. This is wrong. This is wrong. Where do we close today? 1154. I'm not sure why we're showing on a weekly basis as being above it. All right. I'm not going to spend too much time here. We'll figure it out. All right, BSBR. Oh, Banco Santander. I haven't seen this one in a long time. Brazilian company, Brazilian bank. Brazil's been really decimated by COVID. So the weekly chart here is looking very nice. Very tight wedge formation. Your stochastics are hooking up. Let's check out seasonality. We got more than 11 years worth of data. Let's pull that. This has been around for a long time. A little bit more. Okay. Still only 11 years worth of data. Okay. They changed the symbol here too. That was a different symbol at one time. October is generally up 64% of the times. November, not so great. December, very strong periods of time. I think we're breaking out, especially if the dollar tanks. Daily chart, we broke out today. We'll set up an alert on a breakthrough or a retest of support. I also like a rally through. We closed right at it today. This resistance level at around 550 per share. And until one of these fires off, I'm not interested in it. I think that we are going to retest, and I think we are going to break out. So both of them should fire off. So this is a very early stage recovery play. If it happens to shoot up higher, don't go chasing it. It's going to pull back. You have a lot of overhead supply above. Allow it to come to you. Set your alerts. If they don't fire off, ignore it. Move on to something else. JPM. It's, automatically what comes out, strikes me, is that I want to remove it. Is this. We're in a triangle formation on a monthly basis. And take note of these topping tails, wicks, shadows. Call them cupcakes. It doesn't matter. They imply that we have a lot of resistance above. So just be aware of that. It's a good month so far, but the month is very early. Weekly chart. Take note of these huge volume shelves above. It's not going to be easy going, getting through these resistance levels. But we're breaking out on a weekly basis. Daily chart. Good day today. We closed above a volume shelf. Good to see. I have no problem with opening up a position here. Let's check out seasonality. $37 years worth of data. October up 64% of the time. November 54%. December 60%. So fairly favorable period of time. I like JP Morgan. I like the banks right now. As long as the yields continue up higher. If yields drop, the banks drop. Watch the 10-year yield. That's the secret to trading the banks. BNTX. I doubt there's much data here. I'm getting that vibe. Yep. All right. Monthly chart worthless. We broke out this week. The question is, do we close there? Daily chart. We probably will. Good day today, not great because we faded a bit on the day. I like the stock. I think it's going up higher. We cleared a volume shelf. Right here. They won't let me change it. Do we have any support? No support or resistance nearby. Let's go back to that weekly chart. I doubt with so few data. I'm trying to use we do have some automated trend lines here. Nothing really to concern ourselves with. I think it goes higher. Good looking stock. You're in at 70, Emilio? I think you're okay. Where do we close today? Good for you, brother. Just watch for close. I'm gonna send this chart over to you. Make sure we close out the week above $86 per share. I'm going to pop this in the chat box. Okay. BIGC. Oh, this is Tom's pick. BIGC. We're going to stay short term with this one. Not a lot of data. Fairly new issue. Now, somebody said that they were popular in the Midwest. Why would an internet-based company be popular regionally? Out of curiosity, like I wouldn't imagine Shopify having only a regional reach. Are they targeting the Midwest? Are they? What's their deal? What separates them from Shopify? Tom, if you know, or anybody else, I'm just curious. All right, so today was not a good day. It underperformed the market. Markets were up. Big commerce down. Yesterday, big topping tail. This just jumped out at me. You have all these analysts with not one single buy rating on it. And I view that as a good thing. Why? It's because all these analysts will allow the shares to run and then they'll upgrade it after they've got a net long position. And that means that all the potential is there for these names or these ratings to go from hold, sell to buy. That will provide a catalyst to send the shares up higher on that news. So I really don't care. There's no buys on it. It doesn't influence me in the least. I care about what the chart's showing me. Oh, mid-market. Gotcha. Okay. Gotcha. All right. I didn't know that Shopify didn't cover that. Okay. Well, they weren't as targeted towards that. All right. Good info. Let's go to a 4-hour chart. All right, so here's the play here. What we're doing is, and keep in mind, this is a 4-hour chart, therefore very volatile. And we are putting in a flag formation. I think you could buy the shares, to be honest with you. We're very close to the lower band of support. I wouldn't get heavy in my position. I'd nibble to scratch the itch. Then on a breakout above this upper band of resistance, well, let me set my alert. I would add more on that breakout. So nibble here, add more on the breakout, and don't rely too much on the 4-hour charts. As more data populates the daily chart, try to side with the daily chart. And I'm going to do a little bit more analysis on this to get more well-versed on their business model, revenue, earnings, if there are any earnings. But revenue, sales is most important to me, growth. So it's a good looking stock. It looks as though it gapped up higher, pulled back, post-IPO, rallied, failed, consolidating now, building a base. It's probably going to go up higher. NVIDIA. The best that could be said about NVIDIA right now on a monthly basis is that it's consolidating. At current, it has a doji star formation, but keep in mind, it's still in the first half of the month. A lot can happen here. We have no new monthly high, but we have retested support yet again. Weekly chart. We've broken out. We're off the highs of the week. I don't like the topping tail. Daily chart. Yeah. Beware here. Remember that you had technology up today. You had the semis up big today. What did NVIDIA do? Close lower. Beware of a lower low here. If we break out above this upper band of resistance, at or around, what was the high of the day? High of the day, we closed above, let's call it $5.65 per share. I would be interested in it. But until then, I wouldn't be a buyer until we pulled back down to support where I have a lot less risk and a lot more reward. Doesn't have a problem with volume. Most stocks do, with the exception of the small caps. Oh, Christ. Well, I wouldn't say that the down volume today was a problem. I would say that this type of price action, or volume action, I should say, is not what you want to see to the upside. Take note. Forget this volume bar. We'll go from here. And the trend, absent 1 or 2 days over the past month or so, down on volume. So in that respect, volume matters. Yes, you're correct. And that does not bode well for NVIDIA. Now, keep in mind, you take a look at the SMH. It was up nearly 1.25% on the day today. Granted, I think it's extended, but it has volume problems too, right? So there's volume problems across the board. The only place that doesn't, at least at last look, were the small caps. Small caps, big volume, decent price. I don't like this price action today. It was higher, but they just pushed it higher. I think we're going to get a pullback on the small caps. All right, back to our regularly scheduled program. VZ. Last I looked, it was yielding over 7% for you guys out there that like the yield game. This is a pretty easy one. We're in an uptrend channel. Here is your upper band of resistance. Matter of fact, let me show you the power of TrendSpider. It saves time. Pick up your chart. What do I do here? Let me click a button. Boom. There's your trading range. Upper band in red, lower band in green. But I think that we're seeing support develop within this uptrend channel. We have a wedge formation forming. We have a volume shelf, which we can't seem to break out above at, let's call it $60 per share. You're gonna close above $60 a share. Verizon's going up higher. Daily chart. Rejected today. You got to wait for a breakout, or you need to wait for a pullback to support. I would not buy these shares at current. Let's see, what else do we have? Fastly. I already like the daily chart. Good week so far. $118 is resistance. RSI trending up on Fastly. Daily chart. Breakout point failure. We broke out yesterday. It failed to hold today. I'll show you what I mean. This is also known as a bull trap. Right? We broke out, closed above 118.14 per share. Today, we gave it up. That's a concern. And the reason why is we're so extended. We rallied and closed yesterday up and through and closed there through the third standard deviation Bollinger Band. I think you may get a further pullback on Fastly. I would not be a buyer here. Sellers came in en masse today. A lot of selling today. I'm not saying it's going to crash or anything like that. I'm just saying it's extended. Let it pull back in. Where might that support level be? I think back down here to, let's call it 106 per share. If we close down below today's lows, 106 per share. But keep in mind that this lower band of support is rising, so it's going to change. But at current 106 per share, decent support. JWN, Benjai, BIGC. BIGC. We just went over BIGC. You guys may be talking to yourself, and I picked up on it. Sorry about that. JWN. Nordstrom. Oh, my God. These big box retailers, I don't know what's going to happen. Emilio, Bob, when you get a chance, can you look at your Facebook? Sent you a message last night. Thanks. Will do. You know what's strange? I don't know if Franklin's still on, but Franklin sent me a Facebook Messenger. I think it was last Friday. I got it yesterday. He was wishing me a good weekend, and I got it yesterday. So strange. I'll check it out, though, Emilio. You got it. All right. Nordstrom. There's got to be a big number of shorts in this name. In fact, I got to look. Yeah, project. Smash the like button, everybody, please. Thank you very much. Thanks, guys. Guaranteed I would have forgotten today. JWN. Let's check out. God damn it, I clicked the wrong button. JWN. There we go. Help me out with the algos. That's right. Damn algos. Yeah, there's a lot of shorts here. But this is deceiving. You have 34.33% of the shares that I held short. But how I measure it to identify a real good short squeeze, and there's one to be had here. I don't even need a calculator. Let's say we have 43 million shares held short as of September the 15th, obviously old data. We roughly give about 4 days worth of short covering here. So you do have a short squeeze potential. How much cash do they have? Oh my God. They have less than $1 billion in cash. Debt, nearly $6 billion. Quarterly revenue growth declining over 50%. I have to say that there are ongoing concern issues here. Sad. All right, let's go to the chart. Keeping in mind that this company is obviously under a lot of duress. Their balance sheet is not wonderful. If you're going to enter the trade, I would strongly suggest that you stay small. Now, is there a trade here? Yeah, again, the automated trend lines picked it up. I don't need to draw anything. Boom. There they are. We held support in September, retested in October, no breakout yet. This is critical resistance immediately above in red. But I think that they probably will rally it. Higher lows on Stokes. No breakout, but like a coiled spring. Higher lows, RSI. And for that matter, higher highs. Weekly chart. A lot of overhead supply here. I would get excited about the shares here at 16.13. But keep in mind, if they spike it up really quick, like over the next couple of days, up and through this resistance level and up and into that 16.23 mark, keep in mind, it's shorts getting squeezed in all probability. So it probably won't hold up. I'd like to see it inch up and close above 16.23, let it consolidate, and then let the shorts get squeezed. Many times, these shorts, they get really, really complacent, asleep at the switch. So I wouldn't rule that out here. RSI looking good, higher lows, Stokes looking good, but I wouldn't buy it here right now. You're buying right into resistance. Daily chart. Yeah, it's had a nice run off the lows. You don't want to buy into resistance. Too much risk, not enough reward. And especially with the headline risk that you have with this company, ongoing concerns, dilution of shares, whatever the case may be. A lot of negatives out there. The positive side. Let's take a look at the analyst ratings. They can't be good. There's not a... Well, actually, there are some buys. Unless they... Odin Capital, have they changed their mind? Since January, they've had a buy on it. Great company. Good job, analysts. Gordon Haskett, as of January, had a buy rating. Has not withdrawn that buy rating. Let's take a look at what would have happened had we listened to these suspender-wearing geniuses. Where would we be? Let's go over here. Where would we be year to date? I love how they give us free advice. I got to do a video on this. Why do they give us free advice? Issuing upgrades, downgrades. Why? If you would have listened to these guys, you would be down. Because keep in mind, they still have buy ratings on the shares. Down nearly 65% on your money. And they have yet to take the buy rating off. Or at least come out and give the common courtesy of saying, we're no longer going to cover the company. At least do that. Animals. So these are the geniuses that get paid the big bucks. All right, let's take a look at CGI. I think Pat's texted me a symbol. I think his daughter was looking at a couple of charts. I think Shopify was one of them. I don't like this company. Monthly chart, we broke down last month. Nope. The best that can be said at current is that we're holding the lower band of support. If you're going to buy it, use a stop loss right below the weekly low. If it closes down below this line in blue or the weekly low, get out. Daily chart. Not a bad day, but a lot of resistance above here. I wouldn't be a buyer. It's a show me stock. It's going to show us that it could either break out or pull back to support and hold. Right now, you're in no man's land. I would avoid. All right. Pat. Keep an eye on... All right, it's Gdrx. Gdrx. Another new issue. Not a lot of data here. Very new issue. I mean, I excuse me. I can't do much with this. Except identify, excuse me, folks. You're in a trading range here. You're going to stay in a trading range for the foreseeable future. Next couple of weeks, next week. 4-hour chart. Wrong chart. If you're bullish on it, wait for 58.70 to get hit, and then add more on a daily breakout. When is the election day PB? What does that mean? All right, folks. Please smash that like button. Thanks for joining in every Thursday. It's great being with you guys and gals. And everybody have a profitable Friday and a great weekend. And I'll talk to you soon. Be well.